Hello and welcome to another update video about LINK. We are still dancing on that support area, the yellow support area, without clear confirmation that a low has formed. Still looking here at this structure as a 5-wave move to the upside, which peaked in March around $22, $23. And that was, by the way, also the 61.8 retracement of the decline. Just to highlight that again, we haven't looked at the long-term chart for a while. As a silver or gold member, you can access these charts all the time. But we have a bearish scenario on the chart as well, which is basically highlighted here in red. Wave 1 to the downside into the May 22 low, and then the wave 2 to the upside as a flat structure in an ABC structure, which peaked recently here and could now sell off in a third wave. So, I mean, this is a place where that third wave to the downside could start, which is probably why we see so much selling pressure there right now as well. And because we have 5 waves up, so the C wave is completed, or in the bullish interpretation, the wave 1. How can we distinguish between the two? Well, it's the $6.90 level. A break below $6.90 strongly indicates that the wave 3 to the downside has started to unfold. And however, until then, my assumption is we are in the bullish scenario that can take us in a third wave to the upside to $91 and more. The main support area here is between $6.90 and $12.80, but you can see the resistance area. I've just added the golden ratio level around $22. That's an ideal target for a wave 2 pullback, okay, or a corrective rally. So it's not a pullback, but wave 2 retracement, a corrective rally. And yeah, I'm not following the red count primarily because this C wave is basically too long to be reliable, but it's also possible, okay, it's possible. And obviously that would be the pathway we have to follow if there is a sustained break below $6.90, and probabilities for this scenario will increase if we see higher risk that this level is going to break. But that's not what we're doing at the moment. I just want to share again that move to $91, $90 plus is basically still on the cards in the third wave to the upside, as long as, it's always an if-then condition, as long as the $91 level there is holding. Now then, looking at the shorter time frame, we've got here no, that's Bitcoin. 1 second, I got confused there. So here, shorter time frame, 5 waves up, yeah, in what I consider wave 1, or in the bearish interpretation, it would be a C wave, but that's not the preferred count. Looking at the 1-hour chart, we can see the structure of the decline, which I'm labeling as a wave 2. It's a WXY structure in my interpretation, in which we're now in the Y wave, which is an ABC, and the C wave is likely unfolding right now, and we should be in the late stages of that C wave, which means one more low or not. And it's always that one last bit where uncertainty is the highest, because it's about the 5th wave. The 5th wave is usually choppy. Sometimes we don't get a 5th wave, so what we can do is work with resistance levels, and a break above $14.97, which is the initial micro resistance, would be an early indication that a low has already formed. But I cannot strongly lean towards that until we get a break above that level, because as I shared with you yesterday, the rally from the Saturday low, which was formed here around $11.98, is only in 3 waves. A, B, and the C wave was a nice 5-wave move. So it's a 3-wave rally into the middle of the resistance area. So I cannot strongly be leaning towards a more bullish scenario in the very short term, but it's possible, okay, and you can only manage that with trading tactics, that uncertainty. One way of dealing with it is to go along with a stop below the Saturday low if you really want to trade for the long side aggressively. But as I said, from an Elliott wave point of view, there is not clearly yet the setup for that. And if it happens, then we're likely dealing just with a larger B wave. So if you want to trade for a B wave, there you go. But the B wave is a corrective structure, so it can be very short, can be very long, high uncertainty. If you don't like high uncertainty, maybe at the moment just wait for clarity. One more low could offer an interesting, entry point potentially, But obviously we're still in decline, so it always takes an impulsive reversal to confirm really that a low has formed. But the next level where such an impulsive reversal could follow from, or could build on, would be the $10.68 level, which is the 50% retracement of the larger 5-wave move up that developed between June and between June last year and March this year. And then below that level, we have the $8.92 level and $6.90, but ideally we don't even go down that much. The structure allows for one more low, absolutely, but is not needed. If you ask me what I'm leaning to, well, as long as we stay below resistance, I'm leaning towards one more low. That's my update about LINK. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.